My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, today's special guest zooming in from Santa Clara, California, is a real estate investor and a multifamily syndicator, William Liu. William, welcome to the show. Great to have you.
Thanks for having me, Dave.
So, William, give us a little snapshot of what your real estate portfolio looks like. Like, what kind of properties do you focus on? What area to buy in? I'm guessing maybe not in Santa Clara. Just kind of give us the big picture overview.
Sure. Currently we're more invested in multifamily, specifically in Dallas. So my wife and myself and some of our partners have acquired about a 76 unit last year, and then an 82 unit about a little under 3 months ago. So really what we're trying to do is try to reallocate some of our portfolio. A lot of our family portfolio started out in California. So we do have in California, Northern and Southern, Washington, as well as Nevada. And we kind of been strategically reallocating it more on residential to commercial.
So you've got single family homes in those areas and you're now getting into multifamily. Is that what I'm understanding?
That's correct.
Okay, very good. So how long have you guys been in like the single family business in those states?
I started out more as kind of like an accidental landlord in 2010. So I kind of bought during the global financial crisis timeframe. So it was a great time to buy. And now we're kind of in that process of just starting to kind of basically buy more multifamily every year and then basically sell a single family to be able to kind of allocate some of those capital there.
Cool. So are you also raising capital from investors for these deals, or are you kind of being the investors yourselves?
A little bit of both. Yeah, a little bit of both. I mean, we always tell our investors we want to make sure we have skin in the game. That's appropriate. We also want to kind of participate as limited partners as well. But we are raising capital. So I think our first deal, we raised about $1.5 million, just our side of it. And then our second deal, a little bit under 2.5. I think next year going into another acquisition mode, we're probably aiming for that 3.5 million range. So
Nice. Cool. So is real estate becoming a full-time gig for you? Is it already, or what does that look like?
It is a full-time gig right now. So my wife and I currently we co-founded Give Rise Capital a little bit under 2 years ago. We both doing it full-time. I think our thesis is if we're both doing it full-time, then we're able to kind of get there a little bit quicker. And I think we've seen some of that success with some of our recent acquisitions. So we went from 0 multifamily last year or a little bit earlier to 158 units. So I think, that kind of shows us both working at it. She's good at certain activities. I'm better at certain activities. I like to kind of explain it as front of house, back of house.
Which one do you get to be?
I'm more back of house. She's definitely more extroverted, more people person, more fun. I definitely varied up in a lot of different ways.
You and me both, brother. I hear you. Yep.
I love my spreadsheets. I like looking at the numbers. I like going through the finances, and those things are not something she gets joy out of. Let's just say that.
I hear you. I hear her too. Okay, so William, that's good that you and your wife both kind of have your lanes and you figured out who's doing what, avoids all that conflicts type stuff. Now, as a co-GP in these 2 deals that you've done so far, what else do you bring to the table? You're helping with the capital raising side of things. Do you also help with the underwriting? What role do you guys play as a co-GP?
I think like looking at kind of the traditional roles of like you have the asset management and operations, like you have the underwriting, and then you kind of have like the capital raising. I think we're trying to do, because there's 2 of us, we're trying to do all 3 of them. And because we're gifted with different skill sets, we're able to do that. Whereas like, I think if there's one person, it's hard to be all 3 of those things. So for myself, I think the surprising fact was how much capital raising is very analogous to marketing. And that's really was kind of my my background. I did 20 years in corporate marketing, started out as a psychological operations specialist. And so a lot of it feels very familiar. Marketing funnel, creating your ideal investor kind of journey, what's your avatar, like all those like are just kind of my love language in terms of like how I understand the world. So
interesting. So those, that ties in really well if your wife's kind of the people person, but you understand the whole flow, the structure, the funnel, you can build all that stuff and she can kind of be the fence to a lot of that stuff. Is that kind of how you're doing?
I kind of like to explain it as like art and science. So it's like you kind of need a little bit of both. And so I think that's the reason why we've been able to do well just with where we're at right now. And I think that we go on to next year and subsequent years, really just not just applying this to multifamily, but how can we raise capital for startups or, fundraising on a political aspect? Like there's so many different applications.
Interesting. That's cool. That's fantastic how you're bringing those skill sets from corporate life into your real estate investing life.
My wife has a saying, everything is compost.
Everything is what?
Everything is compost, meaning that like everything that we've like all of our lived life experiences or skills, like there's something that can be reused in other parts of your life. So,
okay.
Yes.
I heard you right that it compost. Yeah. But compost is like manure and bullshit, but
meaning it can be recycled, I guess is another way to describe it.
So speaking of 2026, William, what do you and your wife have on, you're bringing down another deal. Like if you wave that realistic magic wand, how many deals a year would you like to be doing short term?
I think one a year is probably all I could handle. I think we also have a growing family. My wife is currently 37 weeks pregnant. And so
congratulations.
Thank you. We'll soon be having another daughter on the way here. So we've kind of been balancing the personal and professional lens of things. So I like having the balance right now of what we do because there's not anyone like if we want to take vacation, I just talk to my wife. It is very simple. It's not like I have to go through an entire approval process, going through like talking to my boss and then working out my team who's going to cover my workload. We just shut it down. And if there's meetings that we need to attend and things like we'll get it done. So
yeah, way better. That's for sure.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
So, William, you've had experience in the single family world. Now you're getting experience in the multifamily world. If you could kind of compare and contrast the two, what have been some of your big takeaways so far?
That's a good question. I say the biggest mindset change is going from where single family to multifamily is really treating multifamily like multifamily is a business. And I think if you start looking at it from that lens and then kind of revert it back to single family, then you can kind of see the difference between property management and asset management. And I think to me, like that has helped me be able to kind of look at our single family portfolio a little bit more strategically instead of just saying, all right, are we going to try to keep this tenant? Are we going to try to bump up rent a little bit? But I'm now looking at it a little bit more deeper, like thinking through what's my cash on cash return. Like, could I even do better with like investing in a different type of asset? So kind of not just going through the traditional buy and hold forever, but maybe there is like a timeline that needs to be allocated because I want a potential return. So,
yeah, depending on how long you've had them owning single family homes in those states, tough to make them cash flow sometimes. That's for sure.
Yes. And there's a lot, like we currently have a lot of equity trapped in there because either we bought it at a low basis and now they've kind of grown through market appreciation, or two, bought it all cash. So.
Right. Yeah. So no mortgage to pay off. Very, very cool. I was going to ask you, so also based on, you're an analytical kind of guy.
Mm-hmm.
So what is your take when it comes to the multifamily market these days? Where do you see things going? Because a lot of people got the crap kicked out of them a few years ago, or they're still in the process of getting the crap kicked out of them. Where do you see things going in multifamily, especially in the market areas that you're focusing on?
Yeah, we're lucky to kind of be specifically focused in Dallas, so I can kind of not just be able to hear like what's going on between lenders and brokers, and the gossip, but also be able to see what's happening with like transaction velocity, like what's on the market, et cetera. But I think it's interesting because the thesis has been like persist to or survive to 25, persist to 26. I think I'm still bullish on multifamily. I don't know when things will take the turn, but I think we have started to see some price reset. And I think that's good signal that the market is potentially turning. And so I like to kind of compare it to global financial crisis, like when my wife and I bought a lot of more single family properties. If you kind of knew then like what you know now in terms of what the bases were going to grow to, like I would have bought everything underneath the sun on single family. And so that's kind of how we're looking at it with multifamilies. Like we're seeing very attractive bases from the peak in 21, 22. Usually you're at like 35% kind of a discount from that particular peak. So that kind of gives you an idea of like, if you can just be able to operate this well, this specific asset, and then be able to grow the NOI, then you should be able to sell at a much higher basis whenever the market becomes a bit more attractive.
So when you guys are looking at opportunities these days, William, when it comes to multifamily, are you looking for any significant value add, or are you pretty much looking to just kind of optimize existing operations and bump up values and lower costs that way?
I think it's more the latter, more the managerial kind of value add component of it. I think the traditional value add strategy with kind of like more Class C ones, like one, there's just a lot of uncertainty that we don't know, like one kind of being like tariffs and the price of goods, but also like how much we're able to kind of potentially push rent growth right now. And then I think three, at least what we see in our market right now, is there's still a little bit of competition in terms of that supply. And so like we were just talking about this morning, the concessions are pretty heavy, at least where we're at in certain submarkets in DFW.
Yeah. Okay. Now, on the capital raising side of things, sounds like you're doing a lot of smart stuff. What have been some of the big takeaways you've had so far from raising private capital, bringing on investors for your deals?
Yeah, I think with that, I think I think the main thing I tell people is and I heard this a few weeks ago, like capital raising is a lifestyle. And I really like that because that's something that my wife and I have really leaned into. It's like we see a lot of more friends / investors at different social events. We're going to different conferences with different people we're having, whether it's our conference or someone else's conference. We're doing like field trips. We're doing content out there just to kind of explain, what's kind of going on. But we're also incorporating like why we do the things that we do. And I've been getting a lot of feedback from people that I've had interactions with in my professional and personal kind of circles, like, oh, I've been following like what you've been doing on LinkedIn or on Instagram, and I want to know a little bit more about this real estate investing. And I think what it does is like it builds like trust, and there's a level of authenticity because they keep on seeing that we're doing it, and not just we're doing it once and then we're posting like 10 months later. So
I like that. Like raising capital is a lifestyle, and you're documenting that lifestyle. You're talking about it. You're creating content around it very, very consistently. And that over time really kind of builds things up. Now, you said something earlier that really piqued my curiosity, Will. And that is that you're kind of a systems kind of guy, and you're applying what you learned in corporate to what you and your wife are doing right now for capital raising. So when it comes to creating a funnel, everybody's heard the term funnel, but it means different things to different people. What does that mean to you when it comes to raising capital? What is, if you don't mind sharing, what is your funnel look like?
Yeah, I think like I think to kind of start at the end, like our funnel, I really kind of define as like who are our avatars, right? So, and I think it really comes from like my lived life experiences, my wife's like lived life experiences, I think we kind of start breaking them down into different dimensions based off of who our current investors are. So there's military, there's people from church, because we're people of faith, obviously Asian American, because that's who we are, live in the Bay Area, and also our proximity to tech. I went to Duke, I went to USC. So I think some of those things of how we started kind of form like who these investors are. But I think really for us, there is kind of that Asian American kind of connection, because a lot of it comes through what we believe value wise. So whether it's like stewardship, transparency. So when I kind of think through the funnel, it's like, I'm not going to try to be all things, all people. I'm going to try to be who generally who I'm trying to attract. So in this case, it's really trying to like lean into some of my own identity as an Asian American male, and what my life experiences are, what my pain points are, and I think that tends to kind of resonate because I just turned 40 this year, and I feel
you're a young punk, William. Don't give me this. I just turned. He had zero sympathy for this.
Age is relative. I understand that. But I'm understanding some of those pain points in life now, where like you have like your W-2, you have kids, you have aging parents, you have like investments. There's so much going at you at life. And I think I really want to make sure that whoever we're helping out from investors, that because I'm able to do this more actively, like I want to be able to create a frictionless experience for them, education, be able to help them through in terms of understanding pitch deck or subscription agreements, really making sure that they have a good experience through and through. And of course, that we take care of their investment and that we're able to give them a good return and then kind of let that repeat itself again.
Yeah, that makes sense. William, time flies when we're having fun. So if people would like to connect with you, I think you got a pretty spanky, nice looking website, or you've got your LinkedIn. What's the best way for people to find you and connect with you?
I think find me on LinkedIn. Also, my email address is pretty easy, william@giverisecapital.com.
All right, perfect. And hey, yeah, keep up the good work. Sounds like you and your wife are doing great things, and you're working very, very well together as a team. So that is always great to see.
Awesome. Well, I appreciate you hosting me, Dave.
My pleasure. All right, everybody, take care. We'll see you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.